There is always plenty happening in the world of crypto, and August was no different. With lots kind of bubbling under the surface, I'm going to give you a rundown of what's been going on with major cryptocurrencies like Bitcoin and the wider market, how this might impact you, and what the coming months might look like. Hi, I'm George, Finder's Investing Expert. This month we partnered with Uphold to bring you all of the latest crypto market news and insights from the past month. If you're interested in more content like this, do me a favor and make sure to like below and subscribe to our channel. So, a lot of what I've got to talk about today relates to Bitcoin and how wider economic factors could impact the crypto market. Although someday we might see crypto completely dislocated from traditional finance, we're not there just yet. And I know that there's so much more to crypto than Bitcoin, but Bitcoin can be a trendsetter for the whole crypto market. If Bitcoin goes up, we tend to see that a rising tide lifts all boats, usually leading to better price movements for altcoins that are downstream. Similarly, if Bitcoin starts sinking, it does tend to drag the whole market down into the depths with it, and often a Bitcoin decline leads to a magnified dip for altcoins. The past month has been fairly calm for Bitcoin's price, but we did see the world's leading crypto go on a little bit of a roller coaster, starting the month at around £50,000 and then falling all the way down to around £42,000 just a few days later on Monday, the 5th of August. But this sort of volatility is pretty standard and part and parcel for Bitcoin. And the reason for this sharp drop in price was actually stock market related and nothing to do with the cryptocurrency specifically. A sell-off in global markets was triggered by a weaker outlook for the US economy and the unwinding of a lot of trades involving the Japanese yen, which actually got stronger after the central bank raised interest rates. And this led to a lot of forced selling and panic. But as the dust settled and markets recovered, we also saw Bitcoin's price bounce back. It hasn't quite fully recovered to the recent highs that we've seen just yet. It's currently sitting at around £45,000, which is perhaps presenting some opportunity for investors who think that, this recent panic and price decline was a bit overblown. It's going to be really interesting to see if we get another recovery jump in Bitcoin's price as investors continue to kind of gain more confidence that what we saw at the beginning of August was more of a technical blip. Over the last 6 months or so, Bitcoin's price has been fairly range-bound, bouncing between around £45,000 and £55,000. And this came after the huge jump at the beginning of the year when cryptocurrency had some serious tailwinds with the introduction of Bitcoin exchange-traded funds, or ETFs, over in the US, and also the Bitcoin halving. Bitcoin ETFs allow institutional investors and retail investors like you and me to invest in Bitcoin using traditional financial products, although we don't quite have them here in the UK just yet. And the recent Bitcoin halving, which took place in April 2024, halved the new supply of Bitcoin entering the ecosystem as the mining difficulty was increasing. Only recently, there were reports that BlackRock's iShares Bitcoin Trust ETF, IBIT, has seen over $20 billion worth of inflows, which is just money coming in, since it was released. And slightly adjacent to this, its iShares Ethereum Trust ETF, Ether, just surpassed $1 billion in net inflows. BlackRock is the largest financial asset manager in the world, so the fact that they control the most popular ETFs for the world's two most popular cryptos is massive. And for anybody doubting that crypto hasn't broken through into the financial mainstream yet, or that it's just a fringe asset, you better think again. Institutional investors like Goldman Sachs and Morgan Stanley, along with hedge funds like Millennium and Boothbay, recently disclosed massive holdings in BlackRock's IBIT and other Bitcoin ETFs on the market. Many crypto investors might be wondering if the crypto market is going to continue being relatively quiet for a while. Well, for anybody that's new to the crypto space and the idea of a 4-year market cycle, it's important to realize that a price consolidation phase, where a price of a cryptocurrency like Bitcoin doesn't move particularly high or particularly low, is pretty common after a Bitcoin halving event. And it's while the market's waiting to ramp up towards the big crazy bull markets where you just can't escape the word Bitcoin or cryptocurrency. If you take a look back at the price following the 2016 halving, there was a long flat price period before the market really kicked into gear in 2017. And the same thing happened in 2020 before the massive price spike and bull market of 2021. There's no guarantee that history will repeat itself, of course, but the relatively stable price that we're seeing for Bitcoin right now is in line with what we've seen in the past in the build up to these huge run-ups where a new market high is established for Bitcoin and other cryptos. So keep an eye out, especially as we make our way towards the end of 2024. Two of the catalysts that could help lead to a notable crypto market bull run relate to inflation data and US interest rates. Firstly, we're starting to see global inflation rates come back down and start to stabilize at manageable levels, with the US being a little bit late to the party. A lower inflationary environment does tend to be better for more speculative assets like cryptocurrencies, because investors aren't as worried about their returns being devalued over time. And they're happier to just kind of, wait and see how things play out, rather than wanting to hold more steady or perhaps boring assets that are actually generating a return today instead of tomorrow. Secondly, we've seen the UK lower the base rate from 5.25% to 5%. And it does look like we could see the US Federal Reserve lower the Fed funds rate in September. If and when this happens, it should be good news for the cryptocurrency market. Similar to inflation, a lower interest rate environment just means that investors are usually happier to take on more risk because they're getting a smaller return from the kind of boring low risk assets like US Treasury bills and savings accounts with banks and things like that. So once we start to see interest rates come down globally, we might see investors willing to accept more risk to get a better return. There's also plenty of other kind of knock-on effects like lower mortgage rates and borrowing costs, all of which can leave people and businesses with more funds on hand to put to work. And some of it could flow into the cryptocurrency market. It usually only takes a small flame to get the market heating up and moving faster. So the two-piece lower inflation and interest rate combo could be the macroeconomic spark that we need to give the cryptocurrency market the momentum it needs as we move towards the end of 2024, and hopefully leading into a decent bull market like we've seen in previous cycles. Thanks for watching. Make sure you tune in next month, and if you want to check out our review of top cryptocurrency exchanges like Uphold, just click the I over in the right hand corner or click here for our latest videos.